We're very pleased now to be joined by Wael Makarem, who is the Regional Senior Market Strategist at Exness. Wael, good morning. It's lovely to speak to you.
Good morning. Thank you for having me on the show.
It's the crisis in Ukraine that is spiking prices here. But what exactly about the war is pushing nickel higher?
Okay, so first let's put the thing straight. Many suppliers are just afraid of the tight supplies and due to the war between Ukraine and Russia. So many producers, they are trying to secure supplies. This puts some pressure on top commodities. Where say you've been talking about oil a few minutes ago, and definitely nickel is one of the most needed commodities at the moment, since it's used in batteries and it's also used in stainless steel. So this is on the demand side. On the other side, what literally happened in the market? Producers do have sometimes the nickel producers, they do have physical stock, physical metal itself. So sometimes they need to hedge their gains. So when the market, let's put it in a straight manner, if you have, for example, 100 ounce of gold physical now at the moment, you bought them at 1,800, and you saw the market went to 1,900, but you don't want to sell them. You don't want to sell them. So what you can do is just short a position, a future contract, in order to just secure your profit margin. So this is literally what happened in nickel. One of the biggest producers, a Chinese one, could be on the wrong side of the bet. Saw the prices rising significantly at the beginning of the year and started building a short position since even earlier. Since last year, they started building a short position. And unfortunately, the war kicked in, and this didn't play in their favor. The prices went higher on the futures, and this triggered certain margin calls. So these producers, they had to bring more cash in, and they couldn't do it for the moment. And when you want to go for short covering, so when you're holding a short position, you want to cover it, it means that you need to buy the security. And when you're buying the security, you're adding more pressure. Thus, prices spiked to almost 100,000 a ton. We were talking about $20,000 per ton at the beginning of the year. So this is almost 5 times. And on Tuesday alone, went up to 110%. The LME had to stop this from continuing because they believe that it's away from reality, and what's happening is just due to technical conditions.
Okay, and that contract on the LME is physically settled, as you mentioned. They're talking about physical nickel. What could it mean for prices at $100,000 a tonne? Does it make sense for those making stainless steel? Does it make sense for those making EV batteries, or is it unsustainable?
Actually, what LME had decided to do is just to cancel all the orders that took place on Tuesday. So till now, we don't have much of an idea where the prices will open, because they're going to resume trading as they promised on Friday. So I believe prices will not open any close to 100,000 because these orders on Tuesday were canceled. We could be trading near 48,000, which was almost latest on Monday. Definitely, these prices, they aren't real, if we just want to put it in this manner, because these prices, they spike this in this way due to tight liquidity on the exchange, and thus it doesn't mean that they are the fair value for producers and even consumers. They will definitely feel this inflation or this rising cost in most of the products that has nickel in or stainless steel, because already we are having a super cycle in commodities. Already prices were around $15,000 a ton last year, and now we're before the war kicked in, we were around 25,000. So it's already an increase of around 70%. This goes to tight supplies. Already the market was suffering from tight supplies before the war, and the war definitely just added the pressure. Definitely, it's not explained in real value, but this is what happens when you have high times of uncertainty and volatility. Everyone wants to secure their part of the supplies. And this causes these spikes in values.
30 seconds left, Wael. If Norin Nickel, the Russian producer, is unable to ship or unable to sell, people are unable to buy from them for sanctions. These are the things that people are worried about. Is there enough nickel out there in the world to make up for it? What could it mean for supplies?
Russia do provide the world with 70% almost with the top grade nickel, which is used for batteries at the moment. And I believe it's very hard at the moment to just replace the supply. So it's going to be very tight. The market already had been tight before this war. And if this continues forward with a tighter supply, we're going to be seeing more fluctuations and more volatility in the market, which could hurt consumers, unfortunately, on the long run.
Wael Makarem is Regional Senior Market Strategist at Exness.